The dollar is not something that's going to lose its value. It already has. If you look back to gold at $30 an ounce in the early 70s and you look at it today at over $1,800, you can see that that equates to the same kind of depreciation in the dollar over that time frame, the dollar's purchasing value. And so it's already done its job, and it will continue to do its job.
Welcome back to Liberty and Finance and Reluctant Preppers. We have a first-time guest today who's been recommended by our subscribers. Brien Lundin is the CEO and president of Jefferson Financial. He's also the publisher and editor of the Gold newsletter, and he's the organizer of the New Orleans Investment Conference, which has a long history of some real big names that have been educating people for generations. Brien, thank you for joining us this first time on Liberty and Finance.
Great to be with you, Donegan.
We wanted to get your perspective for our viewers on what is going on with gold and what the meaning of that is in their lives. We've seen after a 6-year trading trough of gold basically going nowhere within a trading range for over most of the last decade, it broke out in third quarter of last year and has been on the rise since. There's been unprecedented geopolitical, economic, financial events that have been impacting all of us. But you've specifically been taking a close look at gold as part of your gold newsletter and other research that you do. Could you give our viewers your insights into what you see as the main important points about what gold has been doing and what you see it doing next and what that means to us?
Yeah, sure. And you touched on some of the issues there, the pandemic hitting in early March and the unprecedented policy responses we saw primarily and initially from the Federal Reserve, going immediately to unlimited quantitative easing, zeroing interest rates immediately, and doing a lot of things. And then the fiscal standpoint with all of the stimulus programs. Simply put, those are all things that I had been predicting would happen as a result of the next economic downturn because the Fed had to do that. They had created this house of cards in search of a wealth effect and pumped up the financial markets so they couldn't let them collapse. So any significant downturn, they would have to turn back to QE and these other previously unprecedented measures before 2008. They'd have to turn back to those and they'd have to ramp them up considerably. But frankly, I expected all of that to develop over 3 to 5 years, and instead it came in the span of more like 3 to 5 days. So it was not just the degree of stimulus, it was the rapidity and how quickly it came and hit the markets. Gold responded after that first liquidity event down drop, which we had all seen before in 2008. After that initial fall, it responded very quickly, made it just a torrid run higher from mid-March to mid-April, and then spent some time consolidating those gains above 1,700 in the 1,700 to 1,750 range, but couldn't really break out of that. And it just has, quite frankly, over the last week or two. It's finally broken through some key resistance levels around 1,785, 1,790, surpassing previous highs, or actually surpassing a triple top coming down from the previous highs. And then it surmounted that next big number of $1,800. So I think from technical reasons and for fundamental reasons, gold's ready to make the next move higher. Technically, it's looking at the previous nominal high of around 1920. We'll set its sights on that, and I think by the fall it will surpass that. From a fundamental standpoint, we have these stimulus programs have to be renewed. A number of them are running out, and they have to be renewed. And there's going to be a next level of stimulus infrastructure spending. And it's an election year, so the bidding war is firmly in place. Neither side of the aisle is going to say no, and they're going to try and outdo the other one. So there's much more coming, and I think that fundamental move will give gold the kind of headlines that it needs to keep rallying.
I noted that you used the term nominal previous high, that 1920 back
Yep.
from 2011 timeframe. And we've had John Williams from shadowstats.com on here talking about that the Fed's inflation target number of 2% annually, which already would be devaluing the currency by design and by policy, is actually not accurate. And his studies of actual consumer products and things that people purchase puts us more close to 8 to 10% range over that same period of time since 2011. That, back to your discussion about the fundamental position of gold and perhaps silver as well, what do you see as a value proposition of the investable metals now versus with their previous highs?
Yeah, we could talk for hours on the CPI and the government measures of inflation. And I know John Williams is the best out there in that. But we know it understates everything. We know it's not our father's CPI. They fiddled with it a couple of times over the years, and it really isn't inaccurate. It understates inflation, as you would expect. But even using the government's number, the inflation-adjusted price for the $850 peak price of 1980, that equates to about $2,805 in today's dollars, in current dollars. So that's where we would be looking. I mean, the 70s were a crazy time, rampant inflation, et cetera, but we've never seen this kind of monetary accommodation, this kind of an era where any semblance of monetary restraint was thrown out the window. And both sides of the political spectrum, both ends of the political spectrum, were enjoined in trying to shower more and more money and largesse upon the economy and the citizenry. So you could roughly equate this to the 1970s for a lot of reasons. And if that were the fact, then that $2,800 range would be something that you would think would be the upside, or the nearer term, within a couple, 2 or 3 year upside for gold. I think it's entirely likely even that gold will surpass that level and go to new constant dollar highs at some point. And, whether it's this cycle or the next, I think the dollar and other fiat currencies are rapidly losing their relevancy, even credibility on the global scene. And gold and silver and other tangible assets are going to rise relatively to that, in accordance with that.
That's what I was going to ask you next, is in addition to just the price action, the price movement of gold, what do you see its significance in our lives going forward to the ordinary person who wants to protect and preserve their own financial security or position themselves for the world ahead? What role do you see gold playing in all of our lives in the future?
The preeminent role as far as insurance and wealth protection. It's been proven to be over time, over human history. What I tell people is, especially people who are new to the sector, is this is nothing new. We've seen it over and over again throughout human history. Back in ancient Greece, ancient Rome, we've seen currencies depreciated. And this is even in periods when the currency was gold. Gold was money, gold and or silver. Even then, governments found ways to depreciate the currency through alloying silver or gold, or clipping the edges, lowering the weights, etc. So it was just a different method, but the same result. And we've seen it whenever a civilization overspends its means, whether it's through wars, bread and circuses, entitlements. Whenever that has happened, the only way out of these unmanageable debts has been to depreciate the currency in which the debts are denominated. Today, the only difference is that we're a connected world. It's not just one currency where that government has overspent its means. It's basically every currency, both developing economies and developed economies. So every currency is racing to the bottom of the hill, trying to devalue faster than their compatriots. But they're all headed down to the bottom of the hill. And in that instance, and this confuses a lot of people. They look at dollar and they say the dollar is strong. Well, the dollar is strong against other currencies. That's what the dollar index is measured against. The dollar, in fact, is weak against gold, the ultimate measurement, because the gold price is rising in dollars. So there's only one thing left for all of these currencies to depreciate again. I mean, not one thing, but the primary thing is gold, to another degree, silver, and also other tangible assets. I do think that this monetary largesse will, at least in the near term, the intermediate term, also benefit equities. I think the equity market is tremendously overvalued, but as long as the Federal Reserve has the printing presses going burr like they are, then equities will be bullish. Everything, they have to float everything, but far-sighted investors more and more are looking down the road and seeing the inevitable end game and knowing that the only way to truly protect themselves, or the best way to truly protect themselves, is through gold and silver. And that's why you see this kind of groundswell of demand for the metals right now.
You mentioned the depreciation or debasement of currencies throughout history, that this is nothing new, folks. We've seen this play out many times before. And in my mind, I immediately got a visual when you talked about the coin clipping in the Roman Empire. Made me think about the U.S. Federal Reserve note and having lost like 98% of its value over the past century and 7 years since the formation of the Fed. And I thought, what if actually that was represented by a little fragment of a corner of the dollar bill every time you handed it to someone, if people would see that tangibly. And it made me think, when I was a kid, they always said, if you get a torn or damaged bill, as long as it's got more than half of the bill, or if it's got all three corners, then it still counts as the bill. And I thought, shoot, what's left of ours is just a little shred, a little tatter on the end.
Yeah, one of the charts that I use in my presentations is showing the depreciation, or the decrease in the purchasing value, again using the CPI, so understated, but the decrease in the purchasing value of the US dollar just since 1965. And I picked that date because that's when they took silver out of the coinage. And just since then, the dollar's lost 88% of its purchasing power. And that's very similar to what happened, for example, to the Roman denarius through really a few periods of time as the Roman Empire collapsed. And over that time frame, there may have been 8 or 10 emperors that were not voted out of office, but they were removed out of office by violent means. And, I tell people the only thing that saved Jimmy Carter was the electoral process. And that's, again, though, it's relating that to history. It's all happened before. And the dollar is not something that's going to lose its value. It already has. If you look back to gold at $30 an ounce in the early 70s, and you look at it today at over $1,800, you can see that equates to the same kind of depreciation in the dollar over that time frame, the dollar's purchasing value. And so it's already done its job, and it will continue to do its job.
We just interviewed Australian economist John Adams, and he is fighting a bail-in loophole in Australian banking law that he claims almost no Australian citizens are aware of, or even the lawmakers in Parliament there, or the members of the public press who have approached him about this. But we have similar provisions, thanks to Dodd-Frank from 2010, that our deposits and anything denominated in dollars is subject to this ongoing, either the outright bail-in opportunity or just this grinding debasement of our currency, which is now on exponentially increasing acceleration. And it's interesting because we had an interview recently entitled "The Most Volatile Year in History is Not Over Yet," and there was a question from one of our viewers who said, "Oh, this isn't by far the most volatile year in history," but we started going down the litany of all of the expansion of the debt, the fastest drop ever in the major equity indices, and the fastest increase in unemployment ever in the history of our country, and on and on and on. So it's, by many measures, the most volatile year in history, and it's only halfway over. So later this year, at the end of the third quarter, you've got an event where people can get not only, I understand, one-time insight, but ongoing sort of a continuity of context as things continue to evolve and move forward. We'd like to talk with you more about that. Sounds like you've got some exciting news coming up. I was looking online and I see that your New Orleans Investment Conference, which has a long pedigree and is well respected and well known, is being transformed into an entirely new format, a new approach this year. I wonder if you could tell everyone about it.
Yeah, we were forced to go virtual, as everybody has been. And to me, the deciding factor is that the conference and the virus share the same target market, and a lot of our people are older who come to the conference, and I really couldn't try and convince them to come to an event that I thought had good possibility of putting them in danger. So it was just a no-go from that standpoint. So it forced us to look at the virtual option and consider what makes us different from all the other events out there. And value is one of the primary things. We're known for delivering value. We're known for delivering big name speakers and using my network to get people to speakers, really high quality, cutting edge, insightful speakers to participate. And the other thing we have is this kind of sense of camaraderie of people who come down to New Orleans. It's really a destination event. They get there's an intellectual energy down here when you come down to our event. Everybody kind of shares the same worldview and is very much maverick investors who chart their own path. And there's a real camaraderie that comes out of that. So what we decided to do is switch from a purely attendance-based business model and make it more of a membership-based business model. And by that, I mean that while we're going to deliver our typical focused, very intense information delivery during those 4 days of the conference, we're going to continue that all year long and bring value with mini conferences, webinars, panels with experts, Zoom calls between me and experts in my network, interviews with widely watched and up-and-coming companies in the sector, and do that all year long. And unlike podcasts where anybody can come in and get the content, and unlike webinars that are promoted to the world and anybody can sign up, this information will be contained within the walls of this group. So it's only going to be for this exclusive group of us who will get to participate and engage with experts as well and give feedback and have some lively Q&A sessions. So the idea is that one of the ideas is that these experts, because they're speaking in an intimate forum virtually, but still an intimate forum with an exclusive group of elite investors, that they'll be more comfortable in saying things perhaps that they wouldn't to an indescribably large or diverse group of people who just happen to see it forever on the internet. So we're hopeful it'll work, and I think it really will, because the one thing we are for is delivering far greater value than you pay for. So it's going to be an interesting experiment, as is everything these days.
That's true. We're all on new footing. We've been affected. There were 3 out of the 4 conferences we were going to be participating in have already been canceled this year, and the 4th one got converted to virtual. So now you mentioned this will go on for an extended period of time, but the initial dates are October 14 through 17?
That's it.
Okay, yeah. So and that's coming right up.
And anyone can sign up anytime, but actually we're just getting all that set up now. So we're jumping the gun a little bit, but if they go to neworleansconference.com, they'll be able to get notified of all the information. And if they sign up for our free reports and our Golden Opportunities e-letter, they can go to either site, goldnewsletter.com or neworleansconference.com, get on our mailing list, and they'll be notified of everything to come.
When you, in the past, have focused on certain types of speakers, could you give our subscribers an understanding of what the general thrust and the topics are that are covered there and what the nature of the speakers are?
Yeah, we've always focused on or included geopolitics, big name geopolitical experts and speakers, and then economics, and then drilling down to the individual markets. There's always been a thread of freedom, liberty oriented thought and philosophy, and of course the outgrowth of that, sound money and gold, because our organization was really one of the founders of the whole hard money movement, thanks to Jim Blanchard, who started everything. But we've had Ayn Rand, Margaret Thatcher, Alan Greenspan. If you go down the list of really important people of modern history, many of them have graced our podium, and it's been our audience and our audience's appreciation for these kinds of people and these kinds of insights and thoughts that has brought these speakers to our podium. So it's a legacy that's sometimes difficult to uphold because it means we have to go out and find these speakers. And there's not that many of these giants still alive, frankly. But we do our best, and we do get some really smart, impressive, compelling speakers. And also the top people in each individual sector. I read everybody and everything I can get my hands on, and I know just about everybody, or at least no more than 1 degree of separation removed from everybody in the precious metals and mining stock markets. So we do bring something to the table there that I don't think everybody else can, or at least we do it as well as anybody else can.
You mentioned this changes that have happened in our world and how it's related to the cadre of speakers that you bring in. I think that a lot of people would agree that the world that we're currently living in, the content of mass communications and media and the mind share of what's being covered in the public sphere has shifted so dramatically over the past decade, certainly, but over the past year and even 6 months to where it's almost unrecognizable. And I would imagine that just brings even a brighter spotlight to the importance of someone like yourself who basically curates the most cogent minds in the space to talk to people about what's really going on, about real money and other real opportunities that they're not going to be hearing about in the general sphere.
Yeah, it is important to, as you say, to curate that because there's so much out there, and there's a lot of it that's misleading. Even in our little market, there's a lot that I see what some people are reading, and I completely disagree with it, and I think it might even be dangerous for investors. But we also have a long history and tradition of presenting opposite points of view when they're well thought out. We don't suffer from the hubris of believing that we're always right or correct, or that there is or should be any one stated point of view of the conference. We like to bring a diverse group of views, as long as they're from smart people who make good arguments. As an example of that, there's a lot of arguing, I guess, and discussion about the future of the dollar. Some people thinking that the dollar is going to strengthen during the upcoming crises because it's the world reserve currency, and a number of other reasons. And a lot of other people thinking that the dollar is going to weaken precisely because of its status as the preeminent reserve currency. And we don't take a position on that. We think they're both good arguments, and we like to present to people who are making those arguments, both sides of it. And let our attendees and readers make their own decisions. They're all smart people. They have to be smart people, otherwise they wouldn't be on our list.
So again, from the standpoint of a potential registrant who wants to become not just participating in the upcoming 4 days from October 14th through 17th, but wants to stay part of this group and stay tied in and benefit from that perspective and those insights and those additional, unfolding awarenesses as time moves forward and as this unprecedented year in many ways unfolds. How will people find out more?
They go to NewOrleansConference.com and sign up for our free e-letter, so they'll get on our list and they'll get all the notifications as they come out. As I said, we're not quite ready to take registrations for this new business model, but we should be within the next few days.
Even at this early date, could you give us a hint of some of the main speakers or exhibitors that people can look forward to learning from throughout this period that they would be signing up for?
Yeah, absolutely. Even though we still build the roster and have a lot to come, we're very excited that we've been able to sign up Robert Kiyosaki, Jim Rickards, Danielle DiMartino Booth. Of course, we're going to have Peter Schiff, Rick Rule, a lot of our regular speakers there. And that's just the start. We're of course going to analyze the presidential election. And again, the beauty of this virtual event is in being able to deliver value throughout the years that we can analyze with a panel of top level speakers the election before it happens, and then we can come back afterwards and analyze it again and do a postmortem on it and see where our predictions and thoughts may have gone. So it's really, I think, very exciting because there are obviously limitations. From a virtual standpoint, people can't go out to New Orleans restaurants. So they can experience the tangible things of New Orleans and being down here. But by the same token, we have the ability to deliver lots of value in real time consistently. And that's something I don't think any other group is really thought of providing. And that's precisely what we're going to do.
Well, Brien, this is very exciting for those who are wanting to be plugged in, because this has been a year of people getting basically excluded, cut off, locked down, isolated, separated. And this is a way you're bringing people together, to getting them connected back together in a very special way, in a very selected way, for opportunities and insights that they're not going to be finding in the general marketplace or the general internet and that sort of thing. So hats off to you for that. And we'd like to circle back with you when you have time again to learn more about your background and some of your perspectives of the major themes you see of the way markets and our world are heading.
Absolutely. Anytime. Great to talk with you.
If you've decided that now is the right time for you to protect your family's financial future by acquiring physical precious metals, gold and silver, I'm delighted to let you know that I have now become a licensed dealer's representative for Miles Franklin, one of the oldest and most trusted names in bullion dealerships. And we can provide you with physical delivery to your personal possession or to professional vault storage or precious metals IRAs. Just email me at libertyandfinance@protonmail.com, and please include your name and phone number in your email to libertyandfinance@protonmail.com. We'll get right back with you and find out how to best meet your needs so that you can either begin or increase your acquisition of physical precious metals now and protect your family's future starting today.